What the fuck are you doing? What I mean by what is your most frequently asked question? What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. It's our end of the month frequently asked question day. So we are going to answer the most frequently asked questions. But if you have a mortgage question, bring it on. Also, if this video brings you any value, do me a huge favor. Like this video, share this video. Also, if you're not following us by now, please hit that subscribe or notification button so you're notified every time we go live or post new content. And also, we go live every Monday night on Facebook and YouTube at 9 p.m. and we post content daily on Instagram and TikTok. So don't forget to follow us on our other platforms. Bam! It is crazy. The dominoes are starting to fall. For every action, there's a reaction. Back in 2020, the government brought interest rates down to 2%. What did that do? That made people bum rush the market to buy homes to drive up home prices. What else did they do? They caused mortgage forbearance. So if you can't make your mortgage payment, they gave you forbearance for 18 months. So for the people who couldn't make their mortgage payment, they were able to sit in their home for 18 months without making a mortgage payment. And after that was done, whatever they owed they were able to put it to the back of the loan. So they have more buyers coming in, driving up prices, government programs that didn't allow homes to get foreclosed on, and then what happened? They drove up rates. So when they drove up rates, guess what happened? More cash buyers entered the market. In 2022, 36% of homes were paid in cash because they were eliminating more finance buyers. Now, we're sitting in a position where there's an anomaly happening. Typically, when interest rates go up, home prices come down. So when I say this come crashing down, because it just switched, because rates are going up, because of everything the government did, home prices are not coming down. They're going up. And the reason why we know this, before we get into Q&A, builders like turtles are starting to stick their head out. They are not afraid. That means builders are expecting either interest rates to come down in the near future because they're starting to build again, or they understand with these 7-8% rates, people are still going to buy because there's a lack of existing inventory in the market. And we'll go over that in just a second. All right, Instagram, don't forget to go to youtube.com/what's a mortgage and bring on your mortgage questions.
Bring the microphone closer to your mouth.
What up, YouTube family? What's up, Facebook family? How you guys doing? You guys doing good? Trying to get this thing to... All right, guys. So before we go into Q&A, we are going to go over a couple of these articles, okay? So article number 1, Redfin's report, the spring 2023 home buying season never happened. I was a schmuck myself. I believed that, hey, as soon as the holidays were over, that inventory was going to come in the market and it was going to help soften up prices. With these higher interest rates back in January, February, I thought for sure we would see some softening. But none of that happened. People didn't put their homes on the market. Here, Redfin says nearly 7% mortgage rates are preventing both would-be home buyers and would-be sellers from entering the market. Construction on new single-family home is near its highest level in almost 2 decades, providing some hope for an uptick in inventory by next year. Wow. So this is why we haven't seen prices come down. The government, like I said, they let prices stay so low. They didn't foreclose. It's kind of like they didn't let people rotate out, right? They didn't let the circle of life happen when it comes to real estate. People who couldn't make their payments, they let them stay in the house. And now you're bringing up rates and you're driving out more buyers and only certain people can buy, but also people don't want to sell. So that's why we're not seeing prices come down. So we're seeing the exact opposite. For those actions, the reaction is the circle of life with real estate didn't happen. Rates go up, prices didn't come down. So now let's talk about single family home. Okay. This is the National Association of Home Builders. Single family home start post solid gains in the month of May.
Slow down.
Limited existing inventory combined with solid demand and improving supply chain helped push single family starts to an 11-month high in the month of May. Overall, housing starts in May increased 21.7% to a seasonal adjustable annual rate of 1.63 million units, according to the report from the U.S. Department of Housing and Urban Development and the U.S. Census Bureau. Woo! That, and then second one, very similar. Solid demand, a lack of existing inventory, and improving supply chain efficiently help shift builders' confidence into positive territories for the first time in 11 months. So builders are gaining the confidence to build again. So as they build more homes, they have faith that they're not going to take an L, a loss, on home prices. The reason why I say this, think about this. If you were a builder, would you build more homes knowing that home prices were going to come down? Would you build more homes if interest rates were high? Most likely not. Why would you build something that you might have to cut the price on? So builders in the month of May are ramping up to finally start building again. It just tells us that this indicator, they believe either rates are coming down in the future by the time these homes are done, that will push prices up, or they believe that these higher interest rates will not stop people from buying and will keep prices either stable or going up, or they would not be building. Okay, think about the psychology behind that. If you were in that same position, you would not build. So at least we're going to see more inventory. If you are buying new construction, this is the strategy I would use. Try to buy any new construction in the earlier phases. If you get an early phase, as they release more phases, what's going to happen with your phase? It's going to gain equity. For example, if there's 10 phases and you're in phase 1, every phase they drop, prices will push up. So by the time your home is actually done, they might be 3 or 4 phases in. But by the time 10 phases are done, you are going to have a lot of equity. So if it was me, I would buy today with the lowest phase possible and try to close sometime either at the end of 2023 or early 2024. That's when we'll probably see rates finally bend a little or pivot. I don't think pivot till 2024, but bend a little. Why do I say that? Remember, at the end of August, student loan pause is over. That's about $390 a month. 40 million Americans who have student loans are going to have to pay again. That is going to put inflation at a slow down, right? They're going to slow it down. So as that slows down, that's going to bring down inflation. We probably won't see, all that happen in the inflation report till probably the end of the year. So that's why if you buy new construction, try to close at the end of the year, because you might be able to close with a low enough rate on a conventional loan that you might not need to refinance again. So if you go 5% down, 10% down, 3% down, by the time all those phases release, after 2 years of gaining 25% equity, your PMI will fall off. Of course, initially, FHA will have the cheaper payment. But if rates are low, grab a conventional and not worry about refinancing later on. But if you have to buy FHA, just understand that you will refinance next year, okay? When the feds have to pivot to bring this economy back to normal. If there is a recession, the way the government gets preserves the economy is to pivot and bring rates down. So if you're a homeowner and the recession hits and the feds pivot, you can refinance later on. So if you can buy right now, see if anything you can close. If you have to close in the middle of the fall or winter, just know you're going to refinance next year. But if you can get something in the early phases, close at the end of the year, beginning of 2024, whoo, you might get a good enough deal where you're going to gain enough equity in 2 years, and boom, your PMI falls off on a conventional loan only, okay? So that is my word on the street on what's going on in the market. With all the data, I'm still hopeful July 12th, shelter comes in lower, but I know after August is when the student loan payments are unpaused, gives more time for inflation to come down. So worst case, end of the year, best case, sometime in the fall, worst case at the end of the year, beginning 2024, but keep your eyes open. Even builders are building right now, all right? So hopefully that market update helps you out. Let's go some Q&A. All right, so now we are gonna answer the most frequently asked questions. If you do have a question, leave it in the comments and we'll try our best to make sure to get to as many as we can. Okay, so bring on the mortgage questions. Josh Solis, I am a teacher in Central California. I will be a first-time homeowner. Should I go FHA or Platinum Select? GSFA Platinum, I would go FHA if it's Platinum. If it's Platinum Select you're getting, Josh, I would take the Platinum Select. If you can't get Platinum Select because you have to wait 3 years, I think anyone who does down payment assistance, when they refinance next year, they're gonna have to pay off all those down payment assistance. If you're okay with that, then get the Platinum. So for me, I would go FHA 3.5% down, either cover my closing costs or see if I can wiggle around for the seller to cover a portion of it. There's different ways to cut it up. Because I know I'm going to refinance in the future. I'm probably going to go with FHA. That's just me. Hopefully that helps you out. Prime Time Property Solution. Should I use a VA IRRRL benefits? Yes. If you're going to use the IRRRL benefits, instead of refinancing over and over again, probably second quarter, where you'll probably see the peak. I think second, third quarter, when you see the lowest of the lows on rates, hopefully. Just do your IRRRL one time instead of like refinancing a couple times, okay? Hopefully that helps you out. Any reason why I shouldn't put a large down payment on a $500,000 home here in Riverside, like 50% down to be able to afford a monthly payment? Angelina, if you got 250 racks to drop, do what's best for you and your family. But just understand, you would need a big down payment to change the payment significantly. So for me, at most, I would do 25% down. I would preserve the extra money. But if you feel like you can drop 50% down, Angelina, and it's not going to damage your bank account, then do it. But to me, 25% down, I would invest the rest somewhere else. So you have other vehicles compounding and making you money. But if you feel comfortable with it, do what's best for you and your family, okay? So is it time to renew my MLO license? Marco, I would renew it probably fourth quarter, first quarter 2024, okay? Marlon Baranda, are these home prices the new normal? The U.S. has almost normalized minimum pay rate of $15 an hour. Reaction of driving prices up. Are these prices the new norm? Unfortunately, Marlon, these prices are the new norm. We have more family formations now than ever. That means more people are coming together at families in the next 3 to 5 years, more than ever has been, recorded in population. So because of that, when people do come together, they want to go out and buy a home. And since the crash of 2008 and up to 2012, we haven't recovered on building more houses. Currently, I think we're short 6 million houses in the United States. Yes, if we unleash the 16 million vacant properties, different story. But the government's not making people who have homes that are vacant sell or do anything with it. So because of that, we are lacking property. Like I said, for every action, there's a reaction. The government can solve our problems if they want to. I don't care if you're Republican or Democrat. I'm just saying the government in general. So I'm not picking a side. When Trump was president, same thing. Biden's president, same thing. I'm pro you, okay, not pro them. With all the homes that are vacant, if they just unleash that, prices would come down, okay? If instead of giving all this money out, they should have used it to build more affordable homes to keep prices down. But they're not building more inventory, Marlon. If we have more inventory, prices would come down. We would have more inventory and not allow foreigners, hedge funds, and maybe minimize how many units most people buy, but they're not doing that. And that's why you're not seeing, prices come down, okay? Matthew Bowman, as rates go down and previous homeowners come off the sidelines to upgrade and builders start releases, inventory, won't the supply and demand find equilibrium? We're hoping for that, Matthew. What you said is right. We would have to unleash a lot. The problem, Matthew, let's say if you're older, you pass away, your kids get the house, they probably don't want to upgrade to pay the higher property taxes. But there will be a fraction of people that will. And if these people sell, then great. Like I said, Matthew, if you had a rate 4%, 5%, 3%, 4%, and rates got to 6%, would you sell an upgrade? There will be a portion of people who sell, but a lot of people, they can't even upgrade if rates go to 6%. Because even with all the equity they have, it just doesn't make sense monthly payment for them. So, but there will be a portion, and hopefully that portion does help out, okay? I want you to know that I want prices to come down and rates to come down, because you know how many people I have. I'm in the Southern California market. I have less people qualified at $800,000 than I do at $500,000. So if home prices dropped to $500,000 and there was actually inventory, lenders would do better and realtors would do better. We don't wish for these things. These things are just because it is what it is right now. Hopefully it helps you out. If I own paid off a $1 million home, when I sell and buy a $1.2 million home, my $1 million owed equity will cover $1 million off the new home and also owe 200 grand. Is that how it works? So Mark Paredes, if your home is worth $1 million, depends where you bought it at. If you bought it for 500 grand and it's $1 million, that means that 200,000 until the new law changes, you're subjected to capital gains. If you're single, you bought it for $1 million and you bought it for 500 and you sold it for $1 million, anything over 250, even though you pump it into another property, you have to pay capital gains on it. So it depends on what you bought it at. Also, you got your, other things as well, what you put into the house and all that stuff. But if you're married, Mark, you'd have to pay taxes above the 200,000 if you got it for 500,000. If you're single, anything over 750, you're gonna have to pay capital gains on it, even though you pump into another house. Okay. Let me see here. So does this student loan situation mean that the U.S. will be bringing in 14,440,000? If people pay, people, I think it's like 15 million and some change. But that's not the government. That's student loans. So those are loans taken out. So it's not the U.S. is not bringing it in. It's loans to whoever they're borrowing money from. Okay, hopefully that helps you out. So federal student loans. So I don't know exactly how federal student loans work. So if the federal government actually collects it, I know from what I know, the government makes money on collecting taxes. If at a 6.5, $7,200 mortgage, thank you. Mark Paredes, I will have to income to qualify 1.2. So I will have to, yes. If you bought a home for 1.2, you put $1 million equity in, you only have to qualify for a loan of 200 grand. That is correct. The relaxing rush. What are the benefits of the first-time homebuyer program if I have quality down payments? So first-time homebuyer programs, depending on the program you're looking for. Some programs, down payment assistance. Some programs, down payment assistance and closing costs. Some programs give you a cheaper PMI. Some programs give you a cheaper rate. Typically, if you have a big down payment, most likely you make too much money to qualify for these first-time home buyers. So depending on what you're looking for, the relaxed rush, okay? Hopefully that helps you out. Brennan, my situation, I have a primary resident. We're 760. I owe 445. What is the best way to get a second property if I do a HELOC on my primary to get equity out of down? So you can borrow up to 90% of your primary resident, Bren. Some lenders are 80%. So remember, right now, because of, I think HELOC rates are about 8.5. For every 100,000 you borrow, I think it's like $860 a month. So depending how much you're borrowing, just make sure when you rent it out, the rents cover your second property. So it all depends on, it's a seesaw game on how you're playing with the numbers. Also, depending on where you're buying, what property tax you're at. If you want more help, give us a call, 714-790-9697. You can give us a call, send us a text, or email us your situation, info@whatsamortgage.com. And I will go ahead and break that down for you, right, Brendan? Hopefully that helps you out. Lena, do you ever see rates going under 4? I don't see rates going under 4 unless an anomaly happens. I don't think that's going to happen because that would push up inflation again. I think hopefully the government learned their lesson of 2020, because we're in the situation we're in because they let rates go too low and people bum rush the market, driving up prices. Cheap money allowed consumers, investors, hedge funds to borrow money at such a cheap rate, but they didn't build enough homes during that time. Okay. And that's what drove up prices. And also, like I said, all these programs with mortgage forbearance, people didn't have to lose their home. They're not going anywhere. Now with higher rates and higher inflation, people are in their homes. They're stuck. They can't go anywhere. They can't afford to upgrade. They're just stuck in limbo. They're living paycheck to paycheck to pay their mortgage. There might be some that will have to sell, but remember, there is new forbearance plans that just got released a couple months ago that protect these people from selling. Okay. Thank you so much, Ethan. Raymond the Fifth, Portugal. Can you rent out a room that has a modification on it? You can rent out the room. You can even claim border rent on it. Okay. Even though it might not be permitted, but with permits, you deal with more of the city. Hopefully that helps you out. Oh, will veteran qualify for tax exemption in Los Angeles? I don't know too much about veterans tax exemption. There is an income limit on what you can get exempted from what I know. Okay, hopefully that helps you out. I think in certain states, you're like, I think Florida and Texas, that's where you kill it as a veteran. I think for sure Florida. TC King, just sending you a thank to you and your team waiting our rates for a bit, but bought when rates were in the 3s, hoping to get in the 5s. Thank you so much, TC King. Thank you for supporting the cause. Elizabeth, if I own a home that was given to me through a trust, will I no longer be qualified for a first-time home buyer? Yes, Elizabeth, you got a home. You should be happy and thankful. Let me high five you really quick. If you got a home and it's in your name now, and you live in the house, I'm sure you're paying the property taxes on it now. Most likely, you're not qualified for a first-time home buyer. Let others qualify. Come on, girl. I'm kidding. But yes. Guadalupe, could I qualify again for FHA? I rent out my current home. I got a FHA in 2016, an FHA. So FHA has a 100-mile rule, okay? If the property is within 100 miles, you cannot go FHA again. You can go conventional, 5% down. Hopefully that helps you out. What's a SB9? It's a specific program that allows you to split the lots. If you want more details on prime time, so SB9 is for owner-occupied people, not investment, to buy a home and move into it and actually live in there for 3 years, split the lots, convert ADUs, and convert multi-units. From my friend Jesse, he says in certain counties, it's not owner-occupied. For what I know so far, it is owner-occupied, but you have to look by county, okay? Hopefully that helps you out. It is still a buyer's market. Would you recommend a 1031 exchange on a primary to upgrade and after close on a HELOC if I need cash back? If you have an owner-occupied, you cannot do a 1031 exchange. 1031 exchange is from investment to investment. And depending on the market you're in, it might be a buyer's market. All real estate is local. Say it with me. All real estate is local. So in certain areas, it's a seller's market. In certain areas, it's a buyer's market. It depends on the area that you're looking to buy. Okay. If you get a HELOC, buy the property and you want the cash back, you can do something. It's called delayed financing if you're trying to pull the cash back out. Hopefully that helps you out, Matthew. Lena, if you bought your first home FHA, then refinanced the conventional, then turn into a rental, are you able to get your second home now, primary resident FHA? Yes, you can. But remember this, Lena, there's something called, if you bought a home and you actually convert it into an investment and you're actually collecting 2 years rent and it's on your tax returns, then you can buy FHA and you already have a rental income. But if you're going to convert it to a rental and buy owner-occ, then they won't use the rental income for the vacating rent, okay? If there's a 100-mile rule to that. It has to be over 100 miles. Hopefully that helps you out. I'm a realtor in Texas. My buyer owns a property worth $500K and owes $280 on it. He's looking in the same condo complex at the property as $900. Does it make sense for him to do this? You know, when you own too many units in the same complex, I know they HOA frown on that. The thing I don't like about a lot of units, Cameron, about condos, it could be warrantable one day and not warrantable another day. So if you want to sell it, what happens when it's not warrantable? You're minimized on who can buy it. So I think condos are great if you're going to hold it as a long-term investment. If you plan on selling here and there, when it's not warrantable, they can affect the value a little bit, okay? Hopefully that helps you out. What is the forecast for mortgages later this year? So right now, Jan, so let me answer Jan, Cleo, Goob, London. So where do we see rates? We are not going to get a pivot this year, okay? Unless a miracle happens, we don't see a pivot happening. But we see a pause. So typically, the 30-year fixed rate is 2% higher than the 10-year bond. So if the 10-year right now is at 3.7, rate should be at 5.7. And the reason we're not at 5.7, we're at 6.8757%, it's because they don't know when we're going to stop hiking. So the banks, right, they have to hedge for that. So the spread is wider. If they know for sure we are not hiking anymore, that we're sitting at a complete pause for the next 6 months, then at most I see rates at 5.75. That's my theory. Okay. Hopefully that helps you out. So I don't see lower than that. So conventional at 5.7, that means FHA might be 4.5. If they hit the pause button and they keep the 10-year at 3.7 and they see inflation coming down. right? If they know they're pausing, they see inflation's coming down, we will see that. But if they pivot, it might get better. Hopefully that helps you out. See here. Yebron, if I'm a co-signer for a mortgage for my parents, they pay all the rent. Is it harder to get another mortgage loan for myself? If you co-sign for them and you don't live in the house and you don't write off the interest and there's 12 months canceled checks, proof that they make the payment, you don't after 12 months, then you can buy and omit that home. Hopefully that helps you out. I'm driving down PCH through Malibu and saw house after house for sale, literally 2 to 3 story doors down from each other with for sale signs. Is this normal summer for beach homes or I don't know. You know, I think Malibu, if they're selling that quick and they're selling below price, if Malibu is a buyer's market, Christina, buy it up. Okay. If it's a buyer's market down there, buy it up if you're by the beach. Find out how long those homes have been sitting on the market. Typically homes in the higher net worth take a little longer to sell. So sometimes you'll see some signs because no one's really buying it at, you know, today's economy at higher prices. At the higher prices, it's taking longer to sell. Another thing, guys, this is why you see the median home prices lower. The higher end homes, because rates are up, people aren't buying. And people who have these homes, they're not going to take a loss. So they're not selling. So these lower homes that are even going up in prices, they can't go up as much anymore. So you see the price of the medium home prices coming down because the higher homes, they're not selling. Okay, hopefully that helps you out. If I go GSFA Platinum Select, will it be a grant or will I have to pay it off? I'm a teacher, Central. So I don't know off the top of my head, I don't know right now. If it's Platinum Select and it's a grant, it's forgiven right away. So if you get the Platinum Select, it's forgiven right away. If you don't, it's forgiven in 3 years. So say rates pull back next year and it's not forgiven yet because you don't have the Platinum Select, guess what? You are going to have to either pay it off to lower your rate, okay? Can I buy with a higher interest rate using builder preferred loan so that can I buy with a higher interest rate using builder preferred loan so that I use their 15K credit for closing costs, 0% discount? Yes. If you Ramya, if you talk to the builder, hey, can I take a higher rate? You can talk to them about that. Okay. Hopefully that helps you out. Jose Chiguya, are you familiar with FHL Bank, San Francisco Down Payment Assistance Program, claim $50,000 assistance? Would it be better than a conventional loan? If you can get the assistance and it's a shared equity, I saw the California Dream shared equity was a smoking deal. If it's the same as the Dream, I would take it. Okay. I would take it in a heartbeat. I would just have a strategy to drag out enough equity to pay it off if I have to. All right. So that's a lot of good questions today. So, you know, since there were questions, Andy, I'm not going to go to Q&A. So hopefully this information helps you out. Thank you guys. If I answered your question tonight, do me a huge favor. Like this video, share it, tag someone you know that would find this information useful. And if you're not following me by now, please hit that follow button. All right. Actually, here's another question here. Can I buy current situation? Bought a two family with my brother and didn't know about FHA back in 2020. Currently live in one unit and now starting to rent out the other unit and interested in buying another place for myself. Would I be able? No, you can't go FHA. You're going to have to go conventional, Monica. Hopefully that helps you out. Okay. You would have to go conventional or refinance your current one into, if you refinance your current one into a conventional loan, Monica, just make sure you have 25% equity or, you know, 2 unit. Make sure at least you have 50% equity. Then you can go buy FHA again. But remember, it has to be over 100 miles away. Hopefully that helps you out. All right. So yeah, refinance on conventional. Make sure you buy your new FHA over 100 miles. You're good to go. Hopefully that helps you out. Thank you so much, Sarah. All right, guys, here's my contact information. Don't walk around like this. Qualify to buy. Even if you don't buy now, if you don't buy in the future, if you never want to buy at all, it's okay. But if you do want to buy sometime in the near future, I suggest you download our WAM wallet or give us a call, 714-790-9697. You can email us, info@whatsumortgage.com. Send me a DM. Do a soft pull. Know where you stand. Start putting together a strategy so you can see a pathway to home ownership if that's something you are looking for. If you are not looking to buy, it's okay not to own a home. Just make sure you have a plan with inflation rising in rents, okay? Just have a plan. If not buying a home puts more money in your pocket, you're saving money, and you're okay with that, and you have a way to outpace inflation when it comes to your rent, do it. But if you do want to qualify to buy a home, I highly suggest you do a soft pull, know where you stand, put together the pieces so you can do what's best for you and your family. All right. If you want to deal with me directly, Brenda, send a text to 714-790-9697. Okay. Me, myself, my team, we round robin. But Bren, all you have to say is, I want to talk to Min. He said on June 26, 2023, we Gucci. He said he will talk to us. So just let my team know, set an appointment with me and talk. You know, it's pretty easy access to me, right? For now, right? I'm, hopefully for a while. So if it's easy, but no one say, I want to talk to Min. If you want to talk to me directly, okay, and you want to buy a home and you say, hey, I just feel safer talking to Min. Even though I talk fast and you still want to talk to me, just let them know. Text 714-790-9697. Hey, my name is so-and-so. Here's my email, my information. When can I set an appointment with Min? They'll send you a calendar link. We can book an appointment, okay? If not, I'm just going to sit here, do my market update, watch Sons of Anarchy, and guess what? I'm watching Mayans too. It's fire right now, right? New episodes out, I think, on Wednesday. All right, guys. Thank you to everyone who watched, shared, and liked. And once again, thank you so much. We want to end all our episodes with our attitude is gratitude. Without you, there is no us. So thank you so much from the bottom of my heart, and have a great night.